Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we've been hitting you with a lot of macro. So today we're going to talk about what you can do intraday in the markets, how you can make money. So let's dive into this video.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Bob, I think they all get the fact that the second half of the year probably isn't going to be so rosy. We've hit them with a lot of information in that regard. I think your idea of hitting them with what they can do intraday while this market gyrates up and down, heading to maybe a larger pullback later in the year, I think that's a good idea. And you picked an interesting stock pick to show them.
Yeah, Phil, I'm going to show a stock that we just recently traded, and also just to show you, we may be macro bearish, but we are micro opportunistic. And this shows off some of our indicators and tools that if you're interested in these tools, you can just go to our website and get access to them and or the service. But we've been talking about, we have an indicator called the Kona, which looks at breaks from the channel and back in, and then we have it combined with our we call it the heat indicator, which also gives us momentum, heads up to that there might be a reversal in place. So we had a situation here where we were watching a stock called ENVX, and we had a situation here where we had a Kona buy and we had a small trade on it, and it rolled back over again, and it made the classic lower low, and then we got another heat buy and a Kona buy, and we bought it again and we shared it with our subscribers. And then this thing took off, went right to the top of the channel, Phil, 25% gain. And so, if we've been moving a stop up on this thing, we closed it out at 16, but you could still stay in the trade as long as this is a vol stop right here. You could use that as your indicator. Or on the heat side of it, you could have got out here on a change in the direction of the heat from a buy to a sell, or you can wait till the color changes to get out. So you have a couple choices there. So this is a combo trade. I think we like this a lot. We're going to show you one tomorrow where we combo the Kona buy with the sniper, which is another must-have when you do a trade. If you get a combination of signals, Phil, then you jump on the trade. And I'll throw this back to you. You're quite familiar with this because you were kind of the integral to creating this thing.
Yeah, no, I mean, the heat, I think whenever, again, I'm a big confluence guy. So whenever you get, 2 or 3 signals that are firing off in direction, and ideally it's in the direction of an overall, trend. So if you're in an uptrend, you get, confluence on buy signals or cycles rotating up, like the heat there and Kona buy, that's, you're going to have good odds in your favor. So, and that's what usually when we talk about people that starting out trading, especially with our tools, we always tell them stick with the trend, right? And then you can worry about counter trend trading later, because in these modern markets, they do like to trend, and going with the trend is just a lot easier. If you're in a more ranging macro environment, then the counter trend trades can sometimes be better at times, but that's really not the environment that we're in. So I think you guys will find that, once you see the training material on these things, it's pretty straightforward, and it's not that difficult, right? It's not rocket science. It's just being patient and being good with your risk management. And a lot of times that's what people, you give them all the tools and everything works, and it comes down to risk management, but the tools work. So you just have to, be robotic about it when you take these entries, and you'll be fine.
Hey, Phil, hey, one more thing before we jump on to the next thing is that one thing TradingView lets you do is set up watch lists and also set up alerts. So, one thing we do with our service here is that this is not a guru service. So, we give you these tools for a reason so that you can trade things that you like to trade as well. I try to throw a trade out a day for folks, but you don't have to wait for me. You can set your watch list up, set your Kona buys up if you have the Kona. You can set your heat indicator up. If you have the basic and the advanced indicator packages, you can use the trend buy as well. So there are tools as part of the basic package, and then also these additional indicators are available for sale to use as well.
Yep. And then, Bob, before we let these guys go, I wanted to touch on NVIDIA because we get a lot of questions about NVIDIA and AI and all that stuff. And so I thought, let's just show them how things look relative to history. So if you guys notice here, I got this chart up, NVIDIA. I got some colorful bands here. What this is the yearly VWAP. So that's volume weighted average price. And the reason why we have that up is because a lot of the algos look at volume weighted average price. They look at it intraday, they'll look at it on the weekly time frame, monthly time frame, and so on and so forth. Yearly is a big level. So a lot of times when you get a move back to it, like you see here in 2022, big move back up to it, fails at the yearly VWAP, rolls back over. Okay. Now, what's interesting about this move, and everyone's asking is, can NVIDIA go higher? It could a little bit, but you'll notice that we're hitting the upper band. Now, each one of these bands from the blue line is a standard deviation. So you got 1, 2, 3, and 4. Okay, 4 standard deviations. One thing about standard deviations, 1 or 2 standard deviations away from the mean of a move is pretty stretched normally. 3 and 4 is getting out there into the stratosphere. And you have to go back and look at what happened at the top of the stock market bubble in 2021. And NVIDIA, sure enough, was trading and hitting that 4th standard deviation. So what that tells you is that just by probability's sake and mean reversion models, the probability is that NVIDIA is not going to be pushing much higher than what we've just seen. And in fact, we could be putting in a head and shoulders pattern. Now, that means that this could take another 2 weeks to play out up here, right? Because notice here when NVIDIA hit the 4th standard deviation, it didn't just fall off a cliff, right? It took, we're going from November. And if you look at this whole consolidation area, it didn't really start cutting loose until December. So you could spend about 4 weeks, right, in an area like this. So like here, it could be 4 weeks and then you start to cut loose. But the point is, when you hit that 4 standard deviation, it's just really stretching that rubber band. And the markets tend to mean revert, right? And so we're looking for a pullback from these levels. So I just want to give you guys kind of a heads up on how stretched this move is. It's just really beyond. And this is a time where we're in quantitative tightening, right? The Fed is not accommodating this market. We got a 4 standard deviation move when the Fed pumped the market like we've never seen before with over $2 trillion in excess liquidity to get there. That liquidity isn't all out of the system yet, obviously, but it's coming out. And so this makes this move a little more ridiculous in that sense. So I think last year was more kind of a normal, what you would see from, above and below the moving VWAP, or I'm sorry, the yearly VWAP. But this move here is just gone far too high, too fast, and there's a big risk for, I think ultimately what we're going to see at first is closing this gap here. So I wanted to cover NVIDIA because you get a lot of questions about it. It's such a high flyer stock. That's all you see it on, Twitter and everything like that. And AI is the new revolution, but you carry significant risk here at these levels if you're thinking about going like swing long. Now, if you're trading intraday, like what we showed you on the previous chart, which I can swing back to here, these setups are the same on that chart as well. You're going to have the same type of setups like this Kona buy and this heat on the chart on NVIDIA as well. But, swinging, if you're thinking that, AI has got another leg higher, the odds are probably not. So I just wanted to kind of give you guys that perspective.
Yeah, and the only thing I will say is that when you get a standard deviation of 1, you're looking at a 55% chance of a reversion to the mean. 2 is 91 and change. 3 is 95.5. So 4 standard deviations, you're probably in the 98+% chance that you're going to get a reversion to the mean move. And if you notice, NVIDIA is like unique, Phil, in the regards of making these outsized moves. They've done it 2 other times, and both times they push these 4 standard deviation moves, they end up with a 70% of drawdown in their shares.
Yeah.
And so, the expectation's the same. And we trade NVDS, which is a 1.25 leverage short of NVIDIA. In fact, we went back and we entered into this one again today. We're just scalping it. If we can make 3%, 5% on these moves, we're jumping it. And look where NVDS is down there at 2 standard deviations down. We had a little bit of a buy signal today. We went ahead and entered. We're looking to scalp 3%, hop off, and just do this consistently as NVIDIA kind of loses air. Because it's slightly leveraged, you just can't set it and forget it because it'll go against you, as you can see here. So we're looking for a move up into the low 9s, hop off, take profit, and just hop back on again as NVIDIA trades down. And there's a lot of sympathy stocks for NVIDIA too. Tomorrow, we're going to show you how I've been shorting SMCI and what indicators I'm using for that. And then also Taiwan Semiconductors is on the verge of a pretty good sell-off. AMD's in the same situation. So there's going to be a lot of opportunity here as we go into recession, as these chip manufacturers have all been way overbought, and they will come down, Phil. So we're going to show you guys some opportunities here on the short side, but we'll also show you there's opportunities to go long during this macro recessionary environment we think we're going to get in, and we're going to show you those success stories too.
Yep. All right, guys. Well, let us know your thoughts on that. Some technical analysis for you and some broader picture on some of these high flyers. Thanks for watching. Please hit like and subscribe. Let us know your thoughts on what you think of these plays, and we'll certainly bring you more of this as time goes on. All right, Bob, thanks a lot. Thank you, guys. We'll see you on the next video. Take care.
Trade